everybody. Thanks a lot for joining me as at the close on Thursday. I wanted to point out some interesting continuations that we are seeing when it comes to some of the daily activity taking place in the US financial markets. This is the chart of the Dow Jones Industrial Average. Now, I know it wasn't the nicest of days in the market. You can see we closed down 286 points. But what is interesting to point out, and I'm going to say it off from the bat, is that what we established today was the beginning of another continuation. And this is very interesting because we have to ask ourselves the question, or for those who have got sort of an acute sort of perspective of market activity, is this opening gap that we saw between the close on Wednesday and the open on Thursday that of a continuation, a C for a continuation, or is it that of an E for an exhaustion? And that is the biggest question that you should be asking yourself as at the close on Thursday. And I really wanted to sort of drilling down into why that is so very important. What we speculated on earlier in the week was that although we saw the bounce right off from that 25,330 pivot, we asked ourselves the questions, are we going to see a secondary push down to this support area to create that of an oversold sort of double bottom type of scenario setting up? The reason we were dwelling on this was because, again, we were looking at these oscillators coming back into their oversold territory. A lot of them had already sort of corrected out of the oversold territory. But as it stands, the RSI is coming back down. And generally what happens is when you see these reversals, they do generally set up on double touches of the RSI indicator as well. The stochastics can go back and forth, but the general sort of location or the vicinity of where it is still certainly oversold. And also on top of that is when I bring up the simple moving averages, you can see on the industrial average that for the second time, we're coming back on into both, right, the long-term simple moving averages, the 100 and the 200 simple moving average. Now, the good news for the market today, and again, this isn't going to answer that question whether or not this is the continuation to the downside or that of an exhaustion gap at the moment, was that we didn't close anywhere near the lows. And that's very important to point out. Today, we actually rallied off from the intra-session lows, and we rallied considerably. I mean, we made back, all right, over half of the actual losses that were priced in during the session. And as such, what you can see on the Dow Jones Industrial Average is that exposed lower wick. And it's again showing up right at the 100 and 200, and also where we reversed last time as we moved back into oversold territory for the second time within roughly 2 weeks. So again, if this is that of an exhaustion move, you should see the markets actually rally and close this definitively. That would be the first signal that this is a definitive bottom. However, if we simply don't close this window, so say for instance tomorrow being Friday, the markets open up and they actually continue in their bearish direction, it means that the correction still has legs to it. So again, a lot of this, or at least a lot of what's going to happen over the coming weeks and months, it may actually, the markets themselves may actually give us a clue, right, as at Friday tomorrow, based on whether or not we close this window and see a continuation off from this closing price down here today, or again, if we continue in the bearish direction. It is a very big what if, but tomorrow's session is going to be very important. Again, S&P 500, we closed down over 34 points. We're coming back down to retest that 2,800 critical area. Again, I pointed this out to you earlier in the week. It has been resistance. It's also been support. And now in the month of May, it's acting as support for the second time. Surprise, surprise. All right, the satire, we do have another open window. Again, asking yourself the question, is this the continuation to the downside? Okay, if my arrow tool is going to work. Or is it potentially that of an exhaustion whereby we see the markets open up, or at least close the window and set, I guess, the foundation for the reversal off from this area that we did see again, intra-session as at Thursday, whereby again we clawed back, right, over half of those losses that we did see during the session. You can see again this pronounced long lower wick. So again, it resembles that of a hammer candlestick at support. It's showing up at a logical area of support. I do want to point that out to you. And again, past resistance, new support, and also still technically speaking, support even during and throughout today's session as at Thursday. Now, not the big difference, but the one noticeable difference on the NASDAQ is that we actually didn't get the gap. It actually collapsed during the session. So again, when I bring up the simple moving averages, and this is quite interesting too, I pointed out to you on the video earlier in the week that unlike the Dow Jones Industrial Average, which I'll show you right now, whereby we were already testing those simple moving averages, I pointed out to you that the NASDAQ hadn't actually done the same thing. But as it stands as at Thursday, you can see how close we are getting to that confluence of support. You can see the 100 is coming in at 7,563 points, whereas the 200 simple moving average is coming in roughly 32 points below that at 7,531 points. Here we are, we closed at 7,628. and we're down 122 points on the daily time frame. This is a very bearish candlestick, although it isn't that of a long day Morobozu type of candle. It does carry with it a little bit of weight that there may be some continuation to the downside. You can see that we are again trying to accelerate or push off from those exponential moving averages. But what's most important right now is that although it looks as though technically we are seeing that of a continuation, what we're really doing is setting up a range bound sort of perimeter whereby you're wanting to buy off support and sell at resistance. And the good news is that we're coming back down into that support area whereby you should be at least looking to buy the market if you haven't already done so. Personally, I'll be looking again to jump on in continually into the market. Tomorrow seems like a great day given that the market today was down right over 1%. But as you can see on the oscillators, right, and again, when I say that, I'm not talking about personally the Qs, I'm talking about the SPYs. That's my personal preference of the three. But again, they're all largely going to follow one another or move back into synchronicity, even though we do see these short-term sort of divergences in candlesticks. And again, gap theory like we saw today. But what you can see here is that we're pushing back into, right, oversold territory once again. The MACD, the histogram, is starting to accelerate away from the neutral line, or the midpoint here, but it should actually begin to decelerate once we see this the actual support area hold up. And when that occurs, you're going to see these oscillators begin to flick up, all right, probably for the legitimate time. And again, this sort of rotates us right back into that fundamental question, or the very important question of this gap which is set up between Wednesday and Thursday. Very, very important here. Don't be scared about the market. Don't panic whatsoever. Again, if you think about this in terms of Fibonacci support and resistance areas, or at least support areas, if I can bring it up, if we were to use this candlestick just here and to use this long day candle just here, you can see that we haven't even done any technical damage. And again, I get a lot of questions about technical damage when it comes to videos. But look, the biggest macro primary bullish trend line is this sort of magnetic color line coming up through my screen at the moment. But even on above that, you've still got the 61.8 coming in at about 2,600. You've got the 50-point retracement at 2650, and then you've got the 0.382 at 2729.41. So, I mean, this right here, we're still calling it a correction. It's nothing larger or anything more sinister than that of a correction. And we're still seeing it follow through and trickle through even into the daily session that we've just moved through as at the close on Thursday. Now, I just wanted to point out a couple of things when it comes to individual shares. We still haven't really triggered into all but really one or two at the moment. We've been essentially talking about stalking these trades as they move into extreme oversold territory. So you can see on Apple right here just how oversold we are. Okay, we've had an inkling of a suspicion at least that we were going to stop at about 183. We've moved through 183 only barely. We're more or less trading at 180, or you can see on my screen 179.66. And this has been the bullish entry at 193.86. So what we're going to do, and what we were speaking about, was we're looking for clues throughout this week, right, when it comes to individual trades and the markets coming back down into their critical support areas, right? And we're looking for those bounce type of candlesticks. So when it comes to Apple, and again, I'll go into this in more detail tomorrow, or on Saturday, I should say, in that pro analysis class, but you can see the overlapping sort of theme here, right? You get the gap down on Apple. You've got the gap immediately. This was on Tuesday to close the window. And again, we've got the rollover, another gap between Wednesday and Thursday. It's left us with a doji candlestick. But of course, cast your mind back to say the S&P 500, which is coming back down with this gap as well, coming back down to retest this support area at 2,800. So although the chart itself on Apple, it looks relatively bearish, all right? I get that. I understand that. I can see that. But coming back down into logical areas of support and potentially one of these gaps like we began to see between Monday the 20th, okay, and also Friday the 17th, going back a couple of weeks, right? If you're thinking about the close anyway, on the 17th, one of these gaps at the moment that at this point looks like a continuation, that C gap, it may actually very well be that of an E gap. So that's why we're going to begin dragging down, right, these bullish triggers as at that pro analysis class on Saturday. So that's really going to be the theme, the narrative of what we'll be speaking about. Okay, that's a good example when it comes to Apple. I'm not going to go through it sort of stock by stock through our top 12 individual trade list. That is reserved, right, for that 90-minute class that we do on Saturdays. But you can see the sort of setups that we're looking at. Yes, Amazon, it's coming back down into its support area. It has overshot it briefly, but at the same time, we're going to be moving down these triggers. We're more or less sort of closing on that 50 or just below it for the time being. But again, you don't want to be sort of selling these stocks into a bull market, a macro bull market, whereby some of these tech leaders are moving into very rare oversold conditions that they generally don't move into. It is a recipe for absolute disaster. And it generally doesn't work out all that well. You've got Boeing Airlines again retesting, rolling over. However, another white candlestick. Again, I'm still suspicious and dubious on this. I think it is going to break above 366, but we'll look at that candlestick as at the close tomorrow on Friday. Again, you've got an absolute collapse in the price of Baidu at the earnings gap down over here, and we were looking at this potentially bouncing to 150. Instead, here's Monday's candle. It's just continued. So we're back down at 115 at the moment. I'm going to do some interesting analysis on Baidu over the weekend because it's really collapsing, and it's moved now definitively below those sort of decelerating fan lines that have been in effect for a very, very long time. You've got Caterpillar back down at 122.26. I'm very optimistic on this stock, by the way. Incredibly optimistic on this stock. Again, I'll give you the recap over the weekend, but we are at this support area, and we are at that general sort of congestion that we have been in really for the transition anyway from 18 into the calendar year 19. And it looks to me like we're still setting up a series of higher lows as well. So again, a series of higher highs. And this is going to be more or less the turning juncture for Caterpillar, but it's going to be largely dependent on the markets themselves. COP, it's pulled back today. Big gap to the downside. You've got that either C or E sort of gap, an exhaustion gap of this wave of selling. It's a short-term reversal. We have taken out the support. I am going to speak about that on Saturday. This is the one that has shocked us this week. When it comes to that analysis class, you've got CVX, it's still holding up around this sort of declining resistance area at the moment. By the way, on COP, I am still very optimistic on that trade. Disney hasn't triggered, right? When we go into Google, still hasn't triggered. When we go into IBM, still hasn't triggered. And then when we go into Netflix, yes, it did trigger above the swing high of the candle last week. We have this very pronounced upper sort of shooting star, right, with this upper wick. But at the same time, it isn't really being affected or influenced by the sell-off that we saw during today's session on Thursday. So again, there's a lot of sort of green roots underneath this market. But the biggest sort of question for us right now is whether or not this is going to be the exhaustion just here, or if we're going to see, again, some continued weakness into the market moving forward. And that, may or may not actually occur, but the good place to start anyway will be to see what happens with the price action first thing tomorrow morning as at Friday. All right, so on that note, everybody, I'm going to say farewell to you. I will see you either after close tomorrow, or I'd encourage you to jump into that pro analysis class, whereby we'll sit down for 90 minutes and recap the US markets. And forward look, of course, right, the week of trade next week. And I will say today is at the close on Thursday that looking ahead, Monday is going to be a public holiday. All right, the markets, or the US markets, will be closed in observance of Memorial Day. So we will be looking at an abbreviated week's worth of trade. It will be really Tuesday through Friday next week. So it is going to be a shortened week of trade. All right, so on that note, everybody, I'm going to say farewell to you. Enjoy your evening. And again, pay attention to what happens during the trading session tomorrow on Friday. All the best. Goodbye.